Hi everyone, welcome back to the series where we are explaining the concept of arbitrage. And if you look at the couple of videos we posted prior to this, where we introduced what is arbitrage, and we also given you an idea how this arbitrage opportunity can be encashed between spot to future markets. In this particular video, we will be talking about the concept of arbitrage, wherein the future prices are significantly higher than the spot prices. And we will be taking an example from Indian stock market, specifically NSE, because where you see both cash market and future market. And we look after the specific cases where the future prices are significantly higher than the spot price, how we can take the advantage of this arbitrage. In fact, this is a very simplest form of taking an arbitrage, pretty much applicable for someone who is getting started with arbitrage trading as well. But this requires some meaningful capital to get started. We will anyway talk about that as I move forward in this particular session. Let me show you my screen so that you can parallelly understand how it actually works. And we will also give you a meaningful tool that can help you to stay updated with any opportunity arises so that you can encash them swiftly. And now let me give you a quick demo how you can access the spot to future arbitrage from a website called EQSIS.com. So to follow on this particular video, I recommend you to parallelly do it so that it become much easier for you to spotting the table and navigation so that you can reproduce it later. So all you have to do is to get into a website, EQSIS.com. Once you get into the website, you see a section called apps. Underneath, you see EQSIS Primer. So this is where the lot of trading related tools are available. And it is recommended that you can create an account and then make sure that you logged into this particular platform so that you can seamlessly access this platform, and the registration is free. Whereas if you see that you want to parallelly do it without even creating an account, you can still do that. What you have to do is get into this research tool. If you get into this research tool, and there you have a derivative scanner, and get into this derivative scanner where you have a second feature, which is spot future arbitrage. So this is where I'm specifically talking about this arbitrage. And this primarily focus on any price misbehavior between the spot market and future market. Okay. And let me now limit myself with the first particular table, because in this table, it shows that you have a symbol name, and you will also see that the spot prices. And here you see the future prices based on the near contracts, and you have a future price for the next contract. I mean, the two different calendars are available in a way that the next basis and then near basis, we're talking about the differences between spot to futures. So if you look at the Bank Nifty, from spot to future, the differences are 0.58%. And whereas if Aarti Industries 0.62%, and the future prices are higher than the spot price. That's the reason why it is in positive. Whereas if I scroll down, I end up seeing something like AU Bank is having the future price that's significantly lower than the spot price. That's why this is negative. This fair understanding is needed so that we can go and practice it. Let's recollect the first two videos, what you saw in this particular series. In our previous session, by any chance, if you're watching this particular video upfront, I do recommend look at our previous videos where we explain the concept of arbitrage in a way a common man can easily understand. With that foundation, if you get into this, it becomes much easier for you to grab it. Let's see, now you see a two different market, a spot market and future market, where in spot market, the asset price is slightly lower, and future market, the asset price is slightly higher. Okay, but how do I grab it? You see that the Bank Nifty is higher by 0.58%, and Aarti Industries is 0.62%, and ABC, Aditya Birla Capital is 0.69%. So what I'm interested is, let me sort this based on percentage changes. Okay, now I see that the Balrampur Chini, where the spot price is 390.60 and future price is 393.15. So it is close to 0.65% higher. So comparing over 150, 200 active contracts, only one contract, the rank one contract gaining the significant differences. So Balrampur Chini spot price is 390 and future price is 393.15. What is that we supposed to do to encash this? buy it in spot market. But if you wish to buy it in spot market, you have to pay 390 rupees upfront, a cash from your packet, and simultaneously place a sell order at future markets at 393.15, by which we all know that towards the end of this month, the price is going to be same. In the previous video, we already made you aware that why the price is going to be same. So the price discrepancies and how the price is going to be same. So I hope you are aware of that. So I'm not going to explain it again. So now the price is 390 and 393, but towards the end of this month, the price is going to be anywhere more than 393, or it can be 393, or it can be 390, or it can be even lower than 390, but not a problem. Both the prices are going to be same, in a way that you are locking in the profit of close to 3 rupees or maybe 2.85, a kind of a good profit that you were able to log in. But that lock-in profits are just 0.65%. There is a transaction cost and there is a opportunity cost, because that even if you park this money in a saving bank account, you get some meaningful returns, right? So we need to consider that, are we locking in a significant profits or not? By now, 0.65% for about next 15 days, which lines up the expiry, because I'm recording this video by middle of this month, so where the expiry falls at the end of this month. So anywhere I have about 15 days to go. I surprised to see that this 0.65% is not definitely good for me to go for it. So it's not every difference are encashable in arbitrage opportunity, but if there is a significant difference, that we should be in the position to capitalize it. So if you want a platform which should timely remind you in terms of taking such opportunity, then this particular platform can still help you. But I will be talking about how to set alerts and everything, because at this moment you cannot set an alerts because it requires you to log in. That's why I told you to log in. But once you log in, that it enable you to set some alerts. I will be talking about that, setting up those alerts in a separate video. But you may be wondering now that, Murugan, what sort of percentage is good? That depends upon your transaction cost. If you trade with some discounted brokers where the delivery is close to zero as a brokerage, and number two, if you trade with the lot size and lots is only 20 rupees, then even 1% makes sense for you to get that particular returns out of that particular market. But if you have any premium brokers who charges heavily on the deliveries, then probably 1% doesn't make sense to you. So try and understand that your transaction cost, case to case, client to client, it differs. So you have to work on it. That by buying at 390.6 and selling at 393.15, by end of this month, how much are you really going to lock in? Is that make sense? Because it doesn't comes at free of cost, because you're investing 390 rupees. So that money, does it meet at least the interest cost? Those things you have to do it. But the point is, in spot and future markets, when you deal, the future markets are not trading at quantities of one or multiples of one. Rather, it is trading with the multiples of lot sizes. So you have to have a sizable amount to commit to take this particular opportunities, where if you are a very small size traders, this may not be really suit you. So this particular one requires some significant capital. But if you see that the capital is idle in your bank account or not getting utilized with lying in the broker, some sort of returns can definitely be taken, and you should not be missing it out by watching this particular opportunity. Make sure that you actually use this particular tool and see some opportunities just to motivate you. Let me give you a quick demo. All you can do is, I'm just logging into my platform. You see there is a scope where I can set reminders. Am I right? And if I set a reminder stating it is a high premium alerts, because high premium is because the spot price to the future price, where the future price is higher than the spot price, the scenario is called high premium. And if it is significantly higher than the other one, so it's called high premium alerts. If I set a high premium alerts, and if I indicate by saying that I want to be reminded if the percentage difference is more than 1.5%. So now what happens is, this particular platform behind the screen looks for any tradable opportunity where the future price is greater than 1.5% of the spot price. Then since I set this particular reminder, I will be getting this particular option. So there is a scope, but we will be talking about this reminder facilities and other features, and how you can actually enable it, and all of those things in the upcoming videos in the same playlist. So just to tell you that it is a scope, I've made it available in this particular video. Otherwise, I don't want to put a very lengthy video in a very illustrative one. But if you have a scenario where the future prices are way lower than a spot price, that's called a reverse arbitrage. That comes with a tricky one, because sometimes that reverse arbitrage are quite illusionary, because there may be a dividends maybe in the scope. So you need to know how to handle it very smartly. Those things which we will be explaining in the next video, and that makes sense for someone who's already owning that particular shares. So make sure that you don't miss out that particular video. And about setting up reminders, because we have a lot of advanced features on those reminder setting, that will be explained in the subsequent videos. If you are seeing that particular playlist, so that you can scroll down or goes up to see the whole things. Thanks for watching this particular video, and hope you find this video very useful. And if so, hit this like button, and do share this if you see that any of other members may also equally benefit by watching this video. Thanks for watching this video.